Hello, ladies and gentlemen. Welcome to our webinar today. I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's topic will pretty much cover the key factors of fundamental analysis. It is a key topic based on the fact that we will have a look at what is the moving force on the market from a fundamental perspective, as well as we had a brief look the last time we spoke on the topic of general understanding about fundamental analysis. We had just a glance at what is going to be until the end of the month. Today we will mainly focus on the key factors such as economic growth and output, inflation, interest rates, political situation, so on and so on. We will have a look at the speeches that you see and hear everywhere around the news. Especially we will focus on those from US. Also strengths and weaknesses of the fundamental analysis. Between the lines, we will also speak a little bit about those people that like to trade shares and what are the benefits of the fundamental analysis for such traders. Strictly, of course, from the next time, we will only speak about Forex fundamental analysis, and we will continue with commodity fundamental analysis. And at the end of the webinar month, we will be talking about measuring the strength of a currency pair compared to 5 other currencies with one underlying one. So today's key factors, I've aligned them here as you can see on your screens, one after another, so you can guide yourself through to see what comes next. But briefly, we will of course make a few deviations off the topic if there are any questions during the webinar. It might be a question of any other relevance of the fundamental sector. Also, if there are any questions about technical side of the trading, of course I will also answer, but it will be a brief answer due to the fact that today's topic is only for fundamental. So the first one, we will have a look at the natural disasters. Everyone can answer to himself what a natural disaster is. Of course, every now and then we end up in between such natural disasters. We can categorize them as, should we say, those which are by most powerful and affecting the economy of a certain region, such as flooding, hurricanes, tsunamis. Those can have a major impact on fundamental strength and weakness of a certain asset. For example, if we just scroll back in history and we have a look at year 2010, the tsunami in Japan, that had a major impact on the region's manufacturing sector, which of course on the other hand caused significant disruption to the production of mobile technologies and automakers. Why is that? Everyone knows that at the same time the tsunami also increases the expensive insurance claims, all right? Which of course weighed on the balance sheets of major insurance firms. So you can see how everything is connected when we're talking about natural disasters. Of course, depending on different key factors, different sectors will be impacted. So if we're talking about economic growth and output, the key indicator of economic growth is the gross domestic product. This is by far the most important piece of information you can gather from any economic calendar. Another piece of information, what we expect to see in the near future is the US gross domestic product annualized, and of course quarter on quarter for the first quarter. This is actually a preliminary report that we will see on the calendar. This is the last Friday of this month. That's May 29, next week. For those that are not familiar with that, that's why I'm just going into a bit more details. Preliminary report is what we get at the last week of the month. However, the actual numbers, they come straight after the week after that, the first week of the new month. But we will have a look at all of these particular elements of the fundamental analysis when we move into connecting the dots, which is by far the most important piece of information that everyone should just squeeze out of the whole session during the webinars this month. Inflation, of course, is also a very enormous key indicator. However, not to mention, just slightly back for the GDP, this calculates the sum of goods and services produced within the country. It is one of the most important indicators of economic growth and output, of course, which tells us about the economic strength and performance of a certain country that we're looking at. Along the way, we will break down all of this when we start looking at the economic calendar, especially the impacts of those specific key indicators. So when we're talking about key indicators, ladies and gentlemen, I need to sneak in here and let you know that key indicators can be different fundamental pieces of information when we have a look at it from a fundamental perspective. But when we talk about technicals, key indicators are absolutely different there. So don't get confused between key indicators for technicals and key indicators for fundamentals. That leads us to the inflation, and over there the first key indicator of inflation, where all of the traders are keeping extremely cautious eye on, and one of those where we have the consumer price index. The consumer price index that measures the change of the average price of goods and services paid by consumers. It's a major indicator adopted by the governments for inflation targets, and this has a significant impact on setting interest rates. So you see, when we have only one piece of information on our calendar for today, for example, let's say we have the consumer price index. We know that if it's for United States, that if it comes in good numbers, of course that automatically means that it comes stronger for the dollar. But that's not the only thing that an information such as this can tell you. As we mentioned, the measurement of change of average price of goods and services is extremely important of setting interest rates. So this is the information that you can get by looking at a number for a couple of months back. And when we're expecting some kind of announcement, as what we have today in about, what is it now, 5 or 6 hours, let me have a look. It's yeah, about 5 hours, 50 minutes for the Federal Open Market Committee. Those are the inflationary indicators the committee will be looking at for today's announcements. So if you want to make a specific prediction of what the statement would be, you will pull out on a piece of paper all of those inflationary indicators that are affecting the interest rate. Not only, but it's because this is what the focus is for the next couple of months, maybe half a year ahead, until we have a date of the interest rate hike. The second key indicator is due to inflation is the producer price index. In most cases, the PPI, it comes with moderate volatility expectation as we're talking towards the dollar itself if we're eyeing the US economy. So the index measures the change in the price of goods and services at the producer's level. But as you can see, the price index that measures from the producer's side can affect much lightly the dollar. Instead, the consumer index, which measures from the consumer side. This is what the investors are looking at. They are, and this is something that can tell you what exactly the investors are looking at when you see some kind of investor sentiment. Okay, they're saying, for example, the investor sentiment, for example, is bullish on the dollar mid to long term. So why are those investors in such a mood? Why do they think that the dollar will climb in mid to long term? Well, simply because they evaluate a history for 5, 10, 30 years, and they're looking at a specific key indicators, as we mentioned so far, and they're measuring the strength of economy like this. Now, first, it might sound a little confusing to those that are just stepping into the fundamental analysis, but when we start talking in specific about Forex fundamentals, Forex fundamental analysis, commodities fundamental analysis, so on and so on, I will have a schematic, such as something as a graph on all those different pieces of key indicators, their past behavior, and of course we will have a graph telling us what we might expect in the future, and you will see exactly how those investors are publishing their sentiment and on what base, on what grounds, what kind of proof they have that this might happen in the future. That's why it is extremely important to make a fundamental analysis for a longer term period. But near to the end of the session, we will have a look at that as well. For now, I want to move forward to the interest rates. As we spoke a lot about the interest rates so far, ladies and gentlemen, as pretty much everything is connected to that, especially when we're looking forward to such an event. Interest rates have a direct impact on currency rates. That is why we want to know what would be the timing of that rate hike, especially if we speak about US. And I would pretty much compare all of that piece of information that we're getting for US based on the fact that most of the traders out there rely on the trades towards major currencies or dollar crosses, for example, and commodities, of course, compared to the USD. So the demand of the currency with higher yielding interest rate is often greater than the one with a lower interest rate. So what does that tell us, ladies and gentlemen, from that particular sentence that I just said? I'm going to repeat it. Now, the demand on the currency with higher yielding interest rate is often greater than the one with a lower interest rate. That automatically tells us that this particular currency that has higher demand with higher yielding interest rate will be stronger than the one that has lower interest rate. And that is why at the end of the month, the last webinar will be measuring currency strength. This is what we're going to focus on. This is one of the ways how you can choose your trading properly, not only from fundamental perspective, but specifying which currency is stronger at the moment of our analysis. And this is also a very good point of view on how you will pick your trading pairs. Not only just look at the charts and consider that this one is moving quite rapidly for the past 5 minutes, so you decide to buy it. You need to have a good view on the market. You cannot gamble and lose money constantly. Make a few profits here and there, be satisfied for a couple of months, but when you draw the line on an annual basis, you will still be on a minus. So connecting the dots this month will allow you to make fundamental analysis for a long-term period. And if you want for that specific period, you can evaluate which currency is stronger and which currency is weaker. Then you can decide how to patch them up one against each other and trade the most appropriate pair at the correct time in the future. So that leads us to the international trade. Now, what is international trade, ladies and gentlemen? Some of you might already heard of that. Here and there, we get this kind of information in the calendar with, should I say, low volatility expectations, especially for currencies, on a day-to-day basis. So basically, when the announcement comes out, this particular piece of information will not move the local currency that strong. It's not going to have that kind of a momentum or a volatility, rather than, for example, CPI index or PPI index, for example. This particular information is the demand for goods and services for a particular currency increases. So demand for the country's currency also goes up. This means the value of the currency will appreciate if we have a continuous improvement in international trade. That is why investors are looking at these key economic events. They have a list, as the one I do. They have a list of important events. They have a calendar, and they know when certain event comes out, they just input data, and they're getting an evaluation of a particular currency until this moment of time. We will have a look at that further in the future when we spoke about the international trade, especially when we have a look at import and exports. This is a key fundamental event and moving factor for currencies. But right now, I would like to focus on the political situation, as this was one of the requests by the traders. We have sometimes we're making a poll on what particular topic is much more interested to them, especially from those that we keep contact on a day-to-day basis. We know exactly what they need, so that's why we actually categorize all of those topics to give them exactly what they need to achieve their profits on the market. The political situation or political crisis, sometimes you can hear political crisis, sometimes you can hear political situation as in terms of impact on the local currency, and of course uncertainty in a country often have a negative impact on the demand for the currency itself. So when a country is in a political risk, investors' confidence in its economy tends to decrease, which means the local currency will weaken. Directly, I will give you an example with Greece. The recent slump in the euro versus the dollar is not because the dollar is very strong. It's quite the opposite. The dollar is holding quite low levels at the moment. Of course, we expect it to climb in the future, especially when we move closer and closer to interest rate hike from the Federal Reserve. but there isn't slump in the euro, and that was a very sharp move for the past couple of days. That was because of the uncertainty in Europe, and most specifically for Greece. When you hit on a certain, let's say, news agency, the first thing you see when you're reading news for Europe is Greece. Greece and Fed in focus, for example. What you can start looking at is the European shares, the first thing, because they move with the currency one against each other. But this is something that we will compare the last webinar. I'm just giving you a hint on what to expect in the future. Extremely important is to monitor the political situation in a particular country, which, if it's in risk, then it automatically devaluates the local currency. Now, another thing that can give you a more hint, a better intuition to back up your statement, for example, if you know that the currency will be falling from a technical perspective, is when you look at the news, you will have a look at some comments from certain officials that the country itself, for example, as Greece right now, would be unable to make up the upcoming payments to the International Monetary Fund. That automatically sends the euro to another weak low against the dollar, of course, we're comparing. So that, but not only, is a key indicator of what is happening in a certain region. Why I'm saying region and I'm not saying country. So region, you have the euro region, for example. This is a package of countries that share one currency. So one of those countries that have, let's say, not a very small economy can heavily impact that shared currency. And when I say country, that means it's only one currency for one country. And this is the only country that can influence the local currency. It doesn't matter if, for example, in US, you can, you're using US dollars, of course. When you go down to Mexico, it's not necessary to use pesos. You can always use the USD. But that doesn't mean that when something bad happens in Mexico, will influence the dollar. Not directly, of course. So the next thing we will have a look at are the fiscal and monetary policies. Please, ladies and gentlemen, tonight have a look at the FOMC minutes. Open your ears and listen to what Janet Yellen will be talking about. She will eye inflation, economic growth, fiscal and monetary policy. And then at the end, she will mention the interest rate. Because all of that before she mentions that interest rate influence the interest rate itself. That's why when we speak from a fundamental perspective, how to pick your trading correctly, it's very important to listen to what the official says, all right? After we actually speak about the financial, the fiscal and the monetary policy, we will have a look at those speeches that I spoke about, particularly those that influence the local currency as much as it is. So the fiscal policies such as a budget planning, government spending, and taxation encourage or discourage productivity and spending in the economy itself. Therefore, there is a major impact on the currency market. Monetary policy. This is adopted again by the central bank, and it has a very, very big influence on near-term demand for the currency. So you see, the fiscal policy has a major impact, but it has a major impact in the future. Slowly but surely, it will pick up trend in terms of only on fiscal policy, because this is a budget planning. It's a plan. Government spending and taxation. That means this is something that gathers pace in the future, bit by bit. But the monetary policy itself has a big influence on the near-term demand for the currency. For example, let's have a look at today's announcement, the Bank of England, if it has adopted a hawkish monetary policy. This indicates that interest rates are set to rise, and this may increase the demand for the sterling or the pound, British pound, which could therefore appreciate in a result. Now let me say one more time what a hawkish mood means. Hawkish and dovish, those are the two specific terms generally are used around the news, around statements. Hawkish, this is favor using relatively high interest rates to help keep inflation in check. Right, so if they rise interest rates, that means they have reached the inflationary level that they want. For example, US wants about 2% inflation, right? So when they reach 2% inflation, they will rise the interest rates so they can cap that inflation, stop it from rising. Otherwise, high inflation can lead to very expensive goods. Everything will become very expensive. The local currency will devaluate if they don't cap it. That's why they need to rise the interest rates. I hope that I've been extremely clear about what we spoke about so far. It is very important for you to remember what all of those that you have in your screen mean. So if you want, have a pen and pencil, write them down, or if you don't have any and you're on the move, watching us through a mobile device, you can always watch the recording. I believe until Monday next week it will be set up properly in our YouTube channel. For those that have no idea how to find it, we can send you direct links. And of course, you can rewind, back, forward, whatever you've missed, you can have a look at it. And of course, you can step down on every word so you can write that down. That's not necessary. I can send you a PDF file for those that are interested to read about it one more time. Of course, please remember what I've just said. I have it on a PDF, just the general titles, as you can see them in front, and a few reminders so I can pick up and go ahead and make the presentation. So everything is pretty much in my head. I only have some guidelines so I don't miss anything during the presentation itself. So that leads us to the next very important piece of information: whose speeches to keep an eye on. After that, we will finalize today's session with strength and weaknesses of the fundamental analysis. This is also something that you need to know, especially over there. We will sneak in for those that are interested in share trading, something that is highly recommended to use fundamental analysis, especially when we're talking about company shares, Apple, Google, so on and so forth. Something that it's not widely used in terms of platform trading. Basically, the proper trading to do company shares as physical shares on central exchange bureaus, so on and so forth. Long-term trends, all right? We will talk about long-term trends in strength fundamental analysis. But first, let's have a look at speeches. The first most important speech, Chairman of the Federal Reserve Bank of USA. Right now, Chair Yellen. Before that, we had Bernanke. Secretary of Treasury, also for US. President of the Federal Reserve Bank of San Francisco, and so on and so on. All presidents of Federal Reserve banks, they have importance. In fact, they're standing in the center of everything that changes and takes effect in the US. Why is that? Because they have a voice, they vote. Everything that they say counts. Even if you see it in the economic calendar that it has only one stripe, that means the volatility of the local currency when the speech is announced. But it doesn't tell you what kind of impact will have in the future. So you see, we're not only talking about today when we speak about fundamentals, we mostly focus on the past so we can predict the future. The future is what the fundamental analysis is focusing on, long term. Also, speeches of those prominent people, for example, are watched closely by traders. Say less important people actually can deliver a lot of volatility on the market, but I'm actually focusing. When I'm saying less important, that doesn't mean that they're not important themselves in their industry. It actually means that they're not in the government, all right? They're not those that are actually making the decisions and applying the policies. They can only express an opinion out in the public, just say what they think. Let's say chief analyst of some company, Warren Buffett, or any of those major hedge fund managers. All right, enough with the speeches. Let's talk a little bit more about strengths and weaknesses of the fundamental analysis. The first thing we start is the long-term trends, and this is the strength of the fundamentals. Fundamental analysis, ladies and gentlemen, is very good for long-term investments. This is based on very long-term trends. The ability, ladies and gentlemen, to identify and predict long-term economic, demographic, should you say, technological or consumer trends can benefit any kind of investor who picked the right industry group or companies if you are a share trader. This also have the impact over currencies. And this is why we need to have a look at let's say value spotting, for example. Also, for those that are interested in share trading, some fundamental analysts will have to identify, let's say, certain companies that represent a good value. Some of them, some of those might be into S&P 500. Some of those might be into Dow Jones Industrial Average. All of those companies will have a major effect on this index. And this is what you trade basically on the platform. If you're not interested in a particular company to trade its shares, but you want to speculate the index with a group of companies, or CAC 40, or the DAX, or the FTSE, or any other index out there. These are groups of companies and industries that have their own value. It's like some of the legendary investors think long-term value. All of them. Graham and Dodd, Warren Buffett, John Neff. All of those guys are seen like champions of value investing, should we put it this way. But as we speak about fundamental analysis, all of that should not be underestimated. Fundamental analysis can help uncover certain companies with valuable assets and strong balance sheet, stable earnings, and of course can be the driving force of a particular index for a current day, for a week, month, quarter, annual, so on and so forth. This is why when you're trading an index, one more time, CAC 40, FTSE, DAX, S&P 500, Dow Jones Industrial Average, whatever it is that you want to trade, you have to see which companies are the best earners in this package, so you can trade it whether long, whether short. And of course, these particular companies, if they're more than one, that would be better, are based to set the long-term trends in which all of us are focusing from a fundamental perspective. Businesses, one of the most obvious but less interesting to traders. This is a reward fundamental analysis, is a development of thorough understanding of the business. So that could be actually a pain in the ass type of research. I'm sorry for the language, but it could be, because a research such as this can be very tough, time-consuming, but this will definitely reward the analyst, the investor. He will be familiar with the key revenue and profit that drives some companies. Those are earnings and earning expectations. Those can be potent drivers of equity prices. If you actually pay attention, sometimes I've spoke about equities, so on and so forth. You can trade currency equities, commodity equities. Everything is connected, ladies and gentlemen. You cannot neglect a piece of information. You only need to understand how to read it. A good understanding can help trader or investor avoid particular indices where companies are prone to shortfalls, and the particular analyst can identify those that continue to deliver, so you can identify for how long the trend will continue. So what else do we need to know? We need to know what you know, for example, what someone else knows, someone important, a good analyst, for example, what he thinks, what he knows. Because stocks move in a group, by understanding a company is a business, right? Investors or traders can better position themselves to categorize different instruments within their relevant. I'm sorry, I'm starting to tangle my tongue in a knot from so much talking. But what I meant is, the person, the trader, the investor can categorize stocks within their relevant industry group. Okay, the better, the most industries, companies you have in a package that are actually in one index, the higher chance for a good, long, stable trend. As we like to say from technical perspective, perfect 45-degree angle. The most sustainable trend within the Dow Jones theory. Enough with the strengths. Let's have a look at weaknesses of this particular type of analysis. The first thing I will start is time consumption. Fundamental analysis may offer excellent insight, but it can be extraordinarily time consuming, ladies and gentlemen. Time consuming models often produce valuations that are contradictory to the current price prevailing on the exchange traded fund or Wall Street or any kind of exchange bureau. When this happens, the analyst starts complaining, all right? The analyst basically claims that the whole package of traders and investors has got it wrong, and he's the only one that is right. This is not to say that there are not misunderstood companies out there, but it's should I say, it actually have to a trader have to focus on the price action from time to time to see whether this particular analysis is sustained and whether the calculations that you already made are not worthless based on the fact that the trend is already over or it's about to finish. Another thing is also when we speak about share traders or those that like to trade indices, we've got valuation techniques for industry company specifics. They vary depending on the industry group and of course specific of each company. So for this reason, a different technique and model is required for different industries and different companies. This is also taking you up to another level. This is also taking a lot of time to make a research such as these. This can get, again, quite time consuming, which can limit the amount of research that can be performed. You're here on the market to make money. So this is pretty much what is the only weakness of the fundamental analysis. It's tough, takes time, and until you're ready, it might be already over. But as I like to say on the market, there's nothing impossible. The only thing you have to do is be persistent, be as accurate as you can, and if you have trouble, always seek help from those that you trust or from someone that is already proven to be good at what you do. This is pretty much everything that we have to talk about today. To be honest with you, I've got quite a lot of things to cover, but I'm going to leave them for next time, especially because it's pretty much connected to Forex fundamental analysis, and I want to sneak those in when we start looking at those graphs, how we're going to appreciate which news is better than another, to evaluate future price movement, because today's topic was only on key factors for this particular analysis. And if we're going to specify only for Forex, it has to be for the next time, not because I cannot keep going, but I want you to be fresh. I want you to this particular information that I gave you today, let it sink down to your brain, understand it, think about it, read the news, and then next time you will see how better you will do, especially when it comes to remember something that we spoke the last time, for example. When I mention it, and you will say, you see, I know this one. That's why more additional information, more complex information you will receive the next time when we have a look at FX fundamental analysis. This will be, of course, not too long. It will be this Friday, 22nd of May, exactly at the same time, 12 GMT. That's all from me for today. Thank you very much for everyone that joined us today. There are quite a lot of questions. Most of them are actually for one-on-one sessions and some technical questions which I would like to prefer to answer in an email directly due to the fact that I was going to answer only fundamental questions today, but since this is the second topic of fundamentals, the questions that I recently received are mostly much better to be answered in a one-on-one session. Thank you very much for joining us. See you next time. Don't forget to sign up. Thank you. Bye-bye.